This is Vip Vipperman, and I'm excited to be back on the Back in the Pold podcast. Thankful today to be in Fort Worth, Texas, in person with the person I'm getting to interview, which is such a fun opportunity. Normally we're doing these things long distance and all the way across the world. So today we have Mark Crumblish with us here in Fort Worth, and Mark is the CEO of Eagle Venture Studio. Excited to have you with us today, Mark.
Good to be here.
Yeah, looking forward to this conversation, man. I just wish I had some ostrich boots too. Those are excellent.
Well, you're here in Texas. You can get them pretty much anywhere.
I love it. Awesome. Well, man, tell us a little bit about the backstory of Mark Crumblish. How did you get here today? Maybe college, kind of a little bit before that, and then career a little, and then how you got to Eagle Venture Studio.
Well, I'll make the story short as I can. I grew up kind of a blue-collar kid. The way out of the blue-collar neighborhood was the armed services.
Okay.
So I went to the Naval Academy. I was recruited distance runner there and ran all 4 years there and beat Army all 4 years. That's the most important thing.
Yeah.
After that, I flew jets in the Navy for about 8 years. Off aircraft carriers and did a bunch of test flying.
Man, yeah. How hard is it to land on one of those things?
Well, the training's pretty good, so it never gets easy, but I always say it was the stupidest thing you could do for $38,000 a year. It was always interesting and exciting, especially at night. It was terrifying. You know, if you're not scared, it just means that there's something wrong with your head. And the automation today is a lot better than it was then, but it was still a kick in the pants. I really enjoyed the flying. I loved the people in the Navy. The lifestyle was really hard, and I decided not to make it a career. So after 8 years, I got a master's degree in really, it was aviation systems, but experimental flight mechanics.
Okay.
And then I got an MBA from Kellogg and started my business career. I've been in and out of defense companies. My whole career has been technology.
Okay.
3 stints in defense companies managing programs, operations, and business development. 2 in executive roles. There was ITT, there was Rockwell Collins, and most recently Lockheed Martin. And between those, I was in private equity and venture capital. So I ran what was not then called the Venture Studio, but back in the .com era, I was executive director of operations for a venture studio that commercialized defense technology.
Like an intrapreneur, is it where, like building with inside?
It was literally a venture studio. We just didn't have a name for it at the time. But what we would do is we would license a defense technology from a Lockheed or a Raytheon or an L3, and we would create a commercial company around it, fund it, operate it, grow it, exit. So it's very similar to
absolutely
that we have today. And we built a pretty nice portfolio over a 2-year period, had an IPO. We had a very nice exit with one of the companies that I drove the creation of. And then the .com implosion hit, and we kind of dismantled the company, couldn't raise any more venture capital for the next couple of years. And so I'm back into defense again for a few more years, moved to Texas, and I started my own financial services company. And right around that time, that was 07, 08 timeframe, I actually met Wade for the first time. And Profit Inc. was actually born in that conversation. That was one of the companies that we created. Much later, but we had our first conversation about the first portfolio we created 17 years before.
No kidding.
It was actually, I guess, technically 14 years before we actually created, because the underlying technology wasn't mature enough at the time to support its vision.
Gotcha.
But we literally had a 3-hour conversation in our first meeting. Had been colleagues and then became close friends ever since. So when the timing was right coming out of COVID, and I was ready to do some things at the same time, Wade was coming off of a liquidity event where he sold Capital Works to JP Morgan, and I was an investor in that company and an advisor. We decided to create Profit Inc. together. A few months after that, we created Pro-forma, and then we realized by the time we were doing our 3rd launch together that we had a very, very efficient process using the same team, refining our process in the same launch. And I was actually being the anal retentive ops guy and was tracking what our costs and our time to launch were. And we were classically moving down the learning curve, the experience curve. We could plot it, and we looked at that and said, what we ought to be doing is we're really good at this early stage SaaS launch phase. This is what we should be doing for a business model. So that gave birth to what is now called the Eagle Venture Studio.
Nice. So the Venture Studio wasn't the first idea. It was the companies that led you to actually build it.
It was. We actually did. We technically did 4 launches together. So Capital Works, I wasn't on the leadership team, but I was very closely involved as an advisor.
An investor.
And an investor, but I was kind of on the advisory board, so to speak, and Wade was bouncing things off me in the background. And then there was Profiting, Pro-forma. We actually launched a third company, which we decided to shelve. We recognized that it was a good idea, but again, it was a little too early. It's probably about 6 or 7 years too early for the market. We may dust that off in a year or two.
Nice.
But we did the diligence and decided in the validation phase, we could not validate that the market was ready for it yet. So we just kind of put it in mothballs and left it there. And so the next company we launched was, at the time, Eagle Venture Lab was the original name, and then we later changed it to Eagle Venture Studio.
That's cool that you have the flexibility with the Venture Studio to say, hey, before we've spent a lifetime and a whole bunch of money, they're just, hey, we're validating this, and we just don't see right now that it's the right time. Let's just turn it off, and we can turn it back on later if the season's right. But we haven't spent a lot of money. We haven't spent a lot of time. We've just tested an idea, and before we got too far down the road, sometimes entrepreneurs kind of have their baby, and they can't let it go, even if it doesn't have the validation that they would like to have. But in this case,
part of the way our model works, or why it works. So first and foremost is, first, Wade's a strategic genius. I mean, there's no question about that. And I'm a strategic pragmatist. So, in fact, he jokes sometimes that I'm not the CEO, I'm the CEO. You tell him what we can and can't do.
Right.
So Wade can I create the environment where Wade can ideate with the team, and we can validate, we can test a bunch of ideas and then figure out what is the quickest way to validate whether there's something there. And the other part that's great about it is, Wade is a Harvard MBA, I have a Kellogg MBA, so we speak the same kind of strategic and finance language. And then third is we both are trained military people. So Wade being a combat engineer and a ranger, and my background, we have a tremendous amount of process discipline, and we're very data driven. Neither of us gets hung up on emotion or ego, even though we both have strong egos. There's no question about that. But we could talk to each other like brothers. We've never had a crossword between us. We can challenge each other on ideas, and we never argue about anything.
Right.
If we both have different points of view, if I think it's A and he thinks it's non-A, what we'll do is we set up a test. We'll just test the idea and let the data tell us whatever the market says.
Yep.
Our entire process is really set up that way. And because it's got appropriate stages and gates and decision points involved in it, and we bring other people into the process, we don't usually throw too much good money after bad. We have very hard decision points, and we're not shy about saying, you know what, this is not quite ready, or it needs to be developed a little bit more, or it's just not that good of an idea, and we'll just table it. Because between him and me, he's got about 100 ideas, I got about a dozen, and we have plenty of things to move on to if something that we're looking at really isn't there. So we know how to cut losses very, very early in the process. We know where not to spend money almost all the time, since we do primarily B2B SaaS apps. People are shocked to find out that we'll often go a year or 2 or 3 without ever writing a line of code. We do almost everything that we can, and without spending money on engineering. Validate the market, sell products, sell services, whatever we need to. And it's only after that point that we'll start ramping up the spend in engineering and marketing, because those are the two elements that are the most expensive as you're growing a company.
Awesome.
And to bring it up, Vip, the last point I was going to make is that we're acutely aligned on values. we do start all of our team meetings each week in prayer for the team and the team members. And we recognize that the most important thing that we have to build in our launches and in our team itself is the people.
Culture matters, man.
Culture is the most important thing. We are very, very slow to bring somebody onto the team.
Yeah.
We have been very quick to remove somebody from the team if they don't align with our
Culture.
our values and culture and behaviors, because every time you add a new team member, it changes the complexion of the culture.
Yep.
And we have a very, very defined set of protocols and approaches and values that we expect the team members to adhere to one another. And they're not magic.
Yeah.
No, they're very much similar to, which probably has family values, as everybody's treated with dignity and respect. Everybody's opinion matters. We expect everybody to contribute. We expect everybody to do what they say they're going to do when they say they're going to do it, or to ask for relief, or to say, hey, team, I'm going to miss a deadline here because we have these other things come up. But this idea of 100% personal, profound responsibility and accountability, not just for your own work, but to your team members, is a thing that is not easy to teach people. They learned it somewhere else through family or church or team sports or something.
Or the military.
Or the armed.
Yeah, I was going to say in the services.
And you have to look for that. And we also look for entrepreneur qualities. Everybody on our team is an entrepreneur outside of the company as well. Almost all of them have other things that they do and they're working on.
Interesting.
Makes for a nice fit.
Yeah, no, that's awesome. Well, going back to the early days, what was the problem that you guys just distinctly saw in kind of the entrepreneur building venture landscape that really caused you guys to come up with the Eagle Venture Studio as a solution?
Yeah, that's a great question. I would say that there are a couple of big discontinuities in the world of venture. The first is that the interest between generally investors, particularly venture capitalists, and the entrepreneur are not always properly aligned. If you're investing as a limited partner in a venture fund, you're looking for outsized returns as early as possible. That's not always what you're looking for if you're a startup founder. You may have a much longer time horizon, or you may not want to exit at the time that your, let's say, investment partners want to. The second thing is that investors want to invest at the lowest possible valuation.
Yep.
Generally, as late as possible at the earliest possible.
Right. Can I see that it works, but it kind of not pay a lot?
Founders want the exact
Opposite. Yep.
Right. And so by definition, if you're starting out that way, there are misaligned interests. Well, the venture studio, by definition, really closes that gap. And it not only closes that gap and aligns the interest, because at least in our venture studio, we are the founders, or we're co-founders. In a couple of instances, we're co-founders with an entrepreneur who had the idea. So automatically our interests are aligned. By definition, we're the same. The second is that we also help raise the money. So there's a collaborative effort that goes on if we're not the founder with the co-founder in raising the money. The third is, as venture studio, one of the things that we do that venture capitalists don't do is we operate. We roll up our sleeves and we get in and we serve as key components or key members of the management team. So, for example, I was the original CEO of Profit Inc. that we created several years ago. I'm still the CEO today. We haven't had a reason to replace me at this point. That's probably why we haven't gotten world-beating traction yet either, because there's a lot of things that we've had to experiment with and trial and error with a limited amount of capital. And so all of those things go a long way. And the fourth thing that the venture studio does that you don't get in the world of venture is you do a lot more diligence than you can do as a venture fund. Because by definition, you're in a much narrower swim lane, and you're not using the power law to invest in 50 things at once, knowing one or two out of 10 is going to be what returns the whole fund. Venture Studio is going to do 7 to 12 things at a time only with the same team, because you need a very focused, disciplined process. Same team in every launch, and the culture doing this. So by definition, you have to be selective, and then you're staying with those things for a long time. You're not in them and out, from seed to Series A. You're going all the way through this for a number of years, knowing that you have to sink or swim. And as a result of that, the latest data that I've seen on Venture Studios is the internal rates of return for Venture Studio are north of 60%. And the best venture funds are less than half that.
Yeah.
So I think part of that is explained by being able to get in earlier on the cap table. But a lot of it has to do with the alignment of the interests and execution that you're committed to all through that process.
Nice. Is there a game-changing moment, like as you look back over the last 2-3 years as you guys have been building, that you're like, man, at that moment, it was just like magic in this room, where the team was building together, or the company was starting to just go, you're ready to hire an EIR, something that, just really, defines the time for you?
Yeah, there's a couple of those, Vip. But one specific to a company, and another that's just in general, more of a testimony to the environment that we have. Just recently in Profit Inc. So Profit Inc. is a company that provides a unique set of analytics that allows an incumbent business owner to make really good decisions. It's not data. It's actionable insight in a form and format that they've never seen before. It'll tell you what's happening in your business, why it's happening, what to do about it right now, these 5 things, and what your new business value and profit will be if you just break even on those things.
And it's all based on the company's actual financial data. It's not guessing on what's going to happen.
It's not a forecast. It's analyzing what is actually happening.
Nice. Okay.
And that tool set is designed to be utilized in a number of different ways. One is a diligence tool on the buy side or sell side for an M&A event. The second is for a business who really wants to take their profit to a whole different level. It's not for somebody who's just comfortable with being average. If you want to be in the top quartile of your particular industry, you want the profiting tool set. It'll help you do that. Nice. And then the other customer profile is someone who's in trouble. They're maybe upside down on their loan covenants, things aren't going so well, and they really need to turn things around. So in this particular case, we had a referral from a friend of the firm who had a client who said to have a client who's kind of in trouble. The bank's going to call his loan in 45 days.
Oh, wow.
It's a $100 million company. He's not only going to lose his company, he's going to lose his real estate associated with it. Can you guys help him? And when you get that's like somebody wheeling a bleeding patient who's having a heart attack and needs brain surgery.
Right.
Emergency room. They're like, well, the chances of us being able to help really are not that great. Well, long story short, what we decided to do is, instead of charging the client for the profiting tools, we decided we're going to give it to him pro bono. We'll just do the analyses for free. And what we offered the client, we said, we'll help you turn around, and what we'll do is we will align our interests with yours, and we'll just be paid on a portion of the new incremental profit that we help you recover over the next year. That was over and above where you were before you became unprofitable.
Nice.
Like, how do you say no to that?
Right.
So it's like a no-brainer.
Yeah.
So we did that, and within a few weeks, we were able to map out what was going on and convince the current banker to extend the loan terms.
Oh, wow.
Then we put a turnaround plan in place, showed that to a banker, and found a banker who would replace the current banker, which made the incumbent banker delighted because they were no longer going to be upside down.
Yeah. And
then within 4 months, we had helped the company become cash flow positive and reduced millions of dollars of debt that they were.
Oh, wow.
And they not only save the company, they save that real estate, and they will be at a new level of profit by the second quarter of next year.
Oh, my word.
So less than a year.
Yeah. That's incredible. And probably what, tens or hundreds of jobs as well that are saved.
It was hundreds in this case, and the owner also was a primary benefactor of a charity that was doing very, very good work in the Christian community. And so I haven't attached a number to that bit, but I don't know exactly what the numbers are. But this was a $100 million company that was in the second generation, so it had provided a lot of jobs and a lot of value over the years. What had happened was they just grew too fast and weren't quite clear on what to grow with. You need to grow with the most profitable opportunities, not just grow across the board. It's very common for businesses to launch a growth campaign and then suddenly their net income margin erodes or they start becoming unprofitable because it's easiest to grow with the least profitable offerings.
Yeah. Oh, interesting. Yeah.
It's easiest. They're the easiest to sell.
Right. But you need to sell the most profitable things. Otherwise, you get yourself in trouble.
Generally, we'll sell what they're incentivized to sell. And if it's just sell the revenue line, that's what happens. That was a really good recent case. And then we frequently have, like you said, in a Monday morning brainstorm today, where we go through the entire portfolio, is everybody contributes. Everybody who's on the call is contributing what they did this past week, what they're doing this week, what they've learned. And so often the key part of that is what they've learned.
Yeah.
And frequently somebody will contribute something that helps us have an epiphany and it will totally change our business model. Right. So for example, a while back in Pro-forma is again, it's a tool set for entrepreneurs, really, for capital seekers to find capital and capital allocators to find good investors. Over time, we recognized that what we really had was a virtual pitch competition platform. That instead of it taking a year to a year and a half and hundreds of thousands of dollars to put on a pitch competition, find a venue and bring people in and bring investors and feed them and all that, is Pro-forma could do the whole thing virtually in a couple of weeks for a tiny fraction of the cost. Now, what we've realized that the key to making this work was to essentially crowdsource feedback. And that idea came up just while we were brainstorming. First, how do we get people to come to a pitch competition? How do we get entrepreneurs? Well, they're seeking capital, so we offer capital. Then how do we get them feedback? Well, we need to have judges. Well, we could be the judges. Well, wouldn't it be great if we could recruit a whole bunch of other judges? But what we recognize is that we could get dozens and dozens and dozens of judges. In fact, the last pitch competition we had over 70.
Oh, my word.
All evaluating 12 finalists that had been essentially collated by the Pro-forma pitch platform. And each of those judges, all 70 judges, provided written feedback to all 12 of those finalists.
Wow. And
each one of those finalists got a beautifully formatted PDF feedback packet that is worth hundreds of thousands of dollars of consulting. The other thing that happened was each of the judges who was interested in that also got that feedback. For them, as their own personal diligence.
Because they could see what the other judges said.
A lot of them were angel investors. So the problem that you have as an angel investor is you don't really have the time, money, or energy to do the diligence on something. But if you can crowdsource that with 69 other people, all from different domains.
Right.
And you can follow an investment of somebody like Eagle Venture Studio, who does a thorough amount of diligence, and you can get in the deal at the same terms. The founder is offering Eagle Venture Studio. You're in.
Yeah.
You're in.
Pretty sweet.
So that all came out of really just having a team discussion of raising issues and problems and asking, how can we solve that problem? How can we solve this problem? What do we learn from that? You don't get that by just opening up the floor at a corporate meeting.
Yeah, I was going to say, the culture is one in which people feel comfortable and not fearful of sharing ideas.
Yeah, it takes a while to do that. And whenever we bring a new person on board, particularly if they're on the more junior side, fresh out of college or 20s and 30s, they're not used to that kind of environment. And we have to invest a bit of time developing that relationship and developing that trust, where I can literally say, no, believe it or not, I don't want you to go solve this problem and bring me back a perfectly polished PowerPoint with all the answers. What I really want you to do is go sketch this out, hand sketch, with some ideas and options, knowing that none of them will be correct. And that you're not going to get criticized for that. What we're going to do is we're going to build as a team on your ideas. That's very different from most people experience.
Absolutely.
And you have to demonstrate that you're serious about that and create an environment in which you can get constructive support and you can get constructive feedback, but it's never personal. It should never be taken personal. It's a team effort. One of my favorite team adages, even though I'm trained as an aviator, I'm still a Navy guy at heart. I would say we're in a submarine. We either all live or we all die together.
Nice.
And so that should be our attitude, is every venture that we launch is we're all in together. We all live or we all die. And you're not helping anybody if you see something that you hold back. You can always phrase it in the form of a question and say, hey, I'm thinking this, and it seems to me this could be an issue. Am I wrong about that?
Yeah.
And that opens up a lot of time.
Yeah, great opportunities. Really quick, so what does the future look like? So you guys already have 8 or 9 companies in the studio right now. What's the future look like? Obviously, you want to see a couple of those succeed, or you want to see them all succeed. You think we'll see a few of those like just go bonkers and succeed really well, and then a few more companies?
Well, we hope so, but I think that the vision that is a lot bigger than that. Is Wade and I realize that we're onto something here. Is there's a reason why venture studios do as well as they do when they're run really well. And again, you're in earlier, you focus longer, your interests are aligned with the founder, or you are the founder, so you actually have more skin in the game. That's part of it.
Even though you're writing smaller checks.
Even though you're writing smaller checks, but you're getting 4 times the equity.
Yeah.
Getting in at a 2 million pre instead of an 8 or a 15.
Absolutely.
That's
makes a big difference.
Makes a huge difference in terms of the returns long term. The second thing is as a success rate asset class, compared to anything else, is venture studios do a lot better. And it is because you're able to help the entrepreneurs avoid common mistakes, to reuse templates and tools. And ours, for example, nobody who works with us ever has to go find a CTO. They don't have to find a marketing team. They don't have to find a strategy team. They don't have to find a lawyer.
Because it's all in-house.
Pay for templates. They don't have to pay for contracts. We have all that we provide as part of our equity contribution to the studio. Right. So what the founders can focus on, the 2 things that are most important to a startup: developing the product and selling.
Nice.
Those are the things that we want them to focus on, and we'll help them avoid the landmines that they said otherwise. So all that to say this is, we think that the technology is at the point now where we can democratize all that. We can actually build a platform that provides all that in a centralized way. The data, the lessons learned in the LMS can be centralized, along with kind of what you look for and build a culture. And we can build a platform that can become a centroid for a venture studio that can be spread around the country and around the world, with what I would say a few outposts in different regions. Say one in India, one other parts of Asia, maybe one or 2 in Europe, where at least there's a central office to kind of come home to. But the model that we have, we think, is replicable and essentially franchisable, and we can build that and help entrepreneurs all around the globe have a higher rate of success.
Talk about impact.
That's really what this is all about. Is, we talk about it kind of tongue in cheek, but we really think that Eagle Venture Studio and our portfolio companies, we can move the needle on U.S. GDP. We really think we can do that. It's a big, hairy, audacious goal. And we think that we can positively impact the economic well-being of 1 billion people around the world. That's crazy big, how we're thinking about it. Everything that we're doing is we're running through those filters. Is how do we do that? And does what we're doing align with that long-term, big, hairy, audacious goal?
I love it. Dude, Mark, thanks so much for being a part of the podcast today. So excited about the work that Eagle Venture Studio is doing and what you guys are as well at Profit Inc., one of y'all's portfolio companies, and the transformation that it's having on like companies and the lives of the people that work in them. So thanks for sharing with us today, man. I'm excited and look forward to the future you guys have.
Well, me too.